Welcome back, Alpha Hunters. The markets are closed for the week of November the 3rd. And oh boy, did the bulls just wake up on Monday and choose violence the entire week, and they didn't care. So let's talk about what went on this week. Very nice gap up to start off the week on Monday. Nice little gap up there. Not really too active though on Monday. A little bit of a quick push up, quick rollover, kind of just followed the moving averages higher. As the rest of the day kind of went on, a little bit of a sell down there towards the end. Tuesday, a little bit of a dip on the open, kind of just slowly grinded higher again. And then we had a little bit of gap up on Wednesday, pushed higher. I actually bought a put position right there at the high that morning. And you know what? We had a pullback kind of going into the Fed interest rate decision there on Wednesday at 1 o'clock. It was looking pretty good. And then if you don't know what went on the rest of the week, well, it didn't shape up so much. So we got the Fed interest rate decision. And what they talked about here during the press conference for Jerome Powell, kind of given his outlook and kind of what they're seeing as far as the FOMC committee and stuff like that. Basically, a lot of people were very happy that he mentioned, that inflation's trending down. They were kind of liking that, and that risk are a little bit more balanced. If they chose to increase rates or chose to decrease rates, he said risks seem to be in balance in that regards. I didn't really care too much about that, but that is kind of what spurred the market. That's what some people were kind of talking about. I took from the press conference really their inflation reduction plan for the next couple of years. And basically what he said is they expect inflation to get into the upper twos at the beginning of next year and to slowly grind its way through the 2% level for the next 2 years. So it'll enter into the twos, the upper twos, early the next year. And they think, so that would be 2024, and they think it'll eventually get through down into the lower twos by the end of 2025. So that'd be like 2 years of getting the inflation through that 2% kind of range, under 3%, and then eventually getting it under 2%. That'll take about 2 years. So I took that as they are prepared to hold interest rates higher for longer because they know that that's going to be a grind. There was also other people that asked about, do they have any ideas about possibly saying 3%, you know what, we got it down to 3%, that's good enough. We can feel like inflation has been contained at 3%. And basically said, nope, our goal is to get it down to 2%. So to me, I took that as a little bit of a pause, like a little bit of a hawkish pause, because he also said, you know what, we can still come back and raise interest rates later on if we need to. So that was kind of the way I took it. Other people kind of took it as a slightly dovish. It's just kind of your interpretation of what, however you heard it. And apparently most of the market didn't side with me. I can tell you that because we kind of took off there a little bit in the afternoon. Nice little positive day there on Wednesday. Nice gap up there on Thursday. Continued just a push and grind higher all day on Thursday. Yields were really started dropping off, on Wednesday, but they definitely continued to drop off there on Thursday. And then we got AAPL earnings Thursday after the bell. This has been something I've kind of mentioned definitely over the past year. I'm not big on AAPL. I'm not big on Apple. They don't really have much in the way of the growth areas of big tech and what is really driving growth in the big tech areas as far as the cloud. And now, which looks like it's going to be AI. Apple does not seem to have any of those kind of businesses. And that's just kind of where they need to find a new growth thing to kind of keep pushing the business and keep growing the business, because they don't really have any of that. And that's kind of where the market didn't really like their earnings because of that. They did beat on numbers because they're an animal as far as, running their business and what they know as far as iPhone sales and stuff like that. But nice gap up there on Friday. The market didn't really care too much about Apple's earnings or their their forecast or their future outlook or anything like that, even though Apple did gap down, because we had basically jobs numbers that came out Friday morning. They weren't good. They actually were down quite a bit. And so we had yields actually get crushed pretty good there Friday before the bell, which then lifted the futures. And we just kind of slowly grinded higher. Nice little sell down here for the last hour of the day as we kind of ended out the week. So this was a monster week. When we're looking on the live stream on Friday, we were looking at some of the 5 major ETFs that I track here, their weekly performance. And the IWM was up like 7.5% for the week. It was crazy. So we'll run through some of those and take a look at some of those. All right, taking a look here at sector rotation for the week. The big lagger, energies. Energies was a big lagger. And you also had staples, healthcare also lagging, materials lagging behind, industrials and utilities lagging behind. Outperformers for the week, tech, communications, discretionaries, financials, real estate. Taking a look here at week over week options change, and you can see that there was a lot of people buying puts this week. A lot of put buyers. There was not a lot of call buyers, which, you know what? Seems like buying calls would have been the good thing to do. Maybe there was some call buyers for the weeklies of November 3rd. I obviously chopped those off. But going forward, there was a lot of put buyers. And if you track this daily, maybe there was a lot of people buying puts kind of towards the end of the week. But man, there was a lot of put buying out there for just about every expiration going forward, except for maybe out here in March. Not so many put buyers. Take a look here at the DXY, the dollar index, over the past couple of weeks. Kind of mentioned setting up a sideways consolidation. Well, that was kind of put to rest really on Friday. I mean, the dollar had a massive breakdown here. I mean, we could still be consolidating. It could just be a little bit deeper, a little bit longer consolidation. Maybe we eventually chop back higher. Yeah, but I mean, other than that, just kind of an interesting day there on Friday. And that's kind of the other thing about the move on Friday. It just doesn't scream sustaining bull run. It just says, hey, you know what? We've gotten things that have been putting pressure on the market and equities are relieving that pressure. But the reason why they're relieving that pressure is because of bad economic data. Gold was interesting on Friday, the GLD, because, well, I mean, obviously you just saw the dollar breaking down pretty good, but gold was not spiking. Obviously, gold had a monster move there throughout the month of October. So gold might be in a little bit of a holding pattern. I would still like it, probably down around the 180 level. I was kind of mentioning, past couple months, down around the 160s. I don't think this happens anymore. So I think any kind of good dip into the 180, maybe upper 170s, I think you're going to be looking to be bullish on it. But I mean, we'll see how things kind of shape up. But it seems like it's losing some steam right now. Take a look at the 10-year yield. So like I kind of mentioned, going through the weekly wrap up. Yep. I mean, we had huge breakdowns Wednesday, Thursday, and Friday on the 10-year yields. What is very interesting on the 10-year yields is we actually snagged this low back from early October. Interesting. And we didn't close below it. We actually got down below. So maybe we kind of consolidate here and then maybe we get back to pushing higher on yields. I don't know. We'll see. We'll see how it goes. But yeah, we just had a huge breakdown there on yields. So, it wasn't a great week. So we'll just have to see how it develops going forward. Taking a look here at the 10 and 2 yield curve inversion. Yep, dropped off pretty good there Wednesday, Thursday. Mostly the 10-year yield was following pretty good on those days, and the 2-year wasn't really. But the 2-year on Friday dropped pretty good, even though the 10-year, you just saw how much the 10-year was dropping. Well, the 2-year was dropping actually really, really solid there on Friday. And a lot of that had to do with the jobs numbers that we did get Friday morning. So not everything looking all that great. Some of that economic data we were getting this week was not good. And that was one reason why you're seeing yields drop off. So we're leaving the pressure on the equities, but is it going to be a short-term bounce? Probably. All right, taking a look here at the RSP, the equal weight SP 500. Very nice, strong bounce there off the bottom. Take a look at the weekly performance, 5.93%. Checking in with that 10 EMA on a weekly time frame. Very nice. Look at the volumes for the week. Very, very solid. So I was kind of mentioning here over the past couple of weeks that, yeah, the RSP breaking these lows, looking pretty good. Even if it keeps dropping, down to like last year's July lows or last year's October lows. Just keep buying it up. I think that's going to be the best bet. And you know what? This week, very strong move there on the RSP. The DIA, the Dow Jones Industrial Average, very nice strong pop as well, coming all the way up to this 340 level. Very interesting spot. I would have no takes right here just because how strong of a move we just had this week. It did move up a little bit over 5% on the week. So yeah, looking pretty good. Obviously, you can see this is a pretty good resistance spot. We'll see. We'll see if it rolls over, if this was a breakdown and then people bought it up this week. The IWM here bouncing very hard. Didn't really start off the week super strong, but Thursday and Friday, very, very strong here on the IWM. This is another one I've been saying, you know what, down at these levels, you just want to be more of a buyer than anything else. And looking very good this week. It was up 7.57% on the week, checking in with that 10 EMA on a weekly as well. Yeah, that is a move. That is a move. So looking pretty good there on the IWM. Take a look at the Qs. The Qs, very strong. And I mentioned earlier, I picked up some puts there on Wednesday. It was actually on the Qs where I picked up the puts in that morning high. I did not pick those up on the SPY, but didn't really matter because everything else ripped it. Didn't really matter. So we'll see how it comes into next week. What's kind of interesting is the Qs are actually coming into this high, this descending high. So be careful of that. I know a lot of people will be watching that. That's kind of where we rejected right there in the last hour of the day. So we'll see what it looks like as we go into early next week. And taking a look here at the weekly time frame. The weekly, well, the Qs are up 6.5% or roughly thereabouts, 6.5%. So pretty good on the week. Not nearly as good as the small caps, but still had a pretty solid week. And that's with AAPL actually down on earnings on Friday. So yeah, that's a pretty good week. All right, take a look here at the SPY, the SP 500. Very nice, solid week as well. Every day was just up, super solid. Just these gaps, these moves, just continuation. So this is where it's kind of tough because you know, bear market rallies are brutal, and that's kind of what it felt like. It felt more like a bear market rally than anything else, just for how snappy, how directional, how just brutal of a bullish move this was. And that's really all I got. It is very difficult to say, oh yeah, we're going to keep going higher. It's also very difficult to say after a move like this, like, yeah, we're just going to roll over here. Like, I'm not taking that bet. I'm not willing to put money on the table for that. So I would just be like, just hold on for a little bit. I don't think you want to buy into any of these yet. I think you want to just wait, see kind of how the market develops. And that was kind of one thing we were talking about on the live stream earlier today is, you know, if we get a week where it's just kind of sideways, that will be a pretty good indication, because if we break down some sideways action, or if we get anything where next week where we trade higher and then we come back down, that would be kind of interesting to see. So if we end last Thursday, Friday down, maybe where the week opens or something like that, that would be interesting to see some of that develop. But as for now, I would fully expect us to continue just at least slightly higher if we don't continue on with a bullish trend here. And the SPY, let's see how they did for the week. They were up 5.85%. So not as good as the Qs, not as good as the IWM, but still a pretty good week there for the SPY. So we'll see how the market shapes up here over the next couple weeks. But yeah, this is a pretty solid move. Definitely just has to maybe leave you a little bit of cautious if you've been bearish or you're looking to be bearish. As I mean, this is a very strong move, but to me, it just feels like a bear market rally. You just can't do anything really until you see something else kind of set up on it, and that's really all you can do. If you want to try to take some long positions, like, I don't blame you, but just remember, we are still in downtrends. Okay. That's all we did. We kind of just corrected from the lower edges of the downtrend to the upper edges of the downtrend. So just be a little bit cautious on what kind of positions you're trying to take right here, right now. Let things kind of settle out in the market. All right, Outfinders, have a great weekend. Take care.